If you use your own car or van for work, whether you're an employee, a contractor, or self-employed, there's a genuine chance your employer currently owes you money right now, backdated to the 6th of April this year, and a lot of businesses haven't actually caught up with it yet. Let's break down exactly what changed, why the backdating actually matters practically, and how to check whether you're one of the people currently owed a top-up payment sitting unclaimed. We're talking about the Approved Mileage Allowance Payment, commonly shortened to AMAP, the official HMRC rate that determines how much you can be paid tax-free for using your own vehicle on business journeys, and it's worth understanding properly since it affects a genuinely enormous number of UK workers without most of them realizing exactly how it works. On the 21st of May this year, the government confirmed the headline rate for cars and vans is rising from 45 pence to 55 pence per mile for the first 10,000 business miles driven in a tax year. Mileage beyond that 10,000 mile threshold stays at 25 pence, unchanged. This might sound like a fairly routine administrative update, but the context behind it is genuinely significant. This is the first change to this specific rate since the 2011-2012 tax year. 15 years without a single increase, while fuel prices, insurance, servicing, and every other genuine cost of running a vehicle climbed steadily throughout that entire period. Here's the detail that makes this genuinely urgent rather than just an interesting piece of tax trivia. Even though the government only announced this change on the 21st of May, the new 55 pence rate applies retrospectively to the 6th of April, the very start of this tax year. That means every single qualifying business mile you've driven since early April already counts at the higher rate, regardless of when your employer actually processes the paperwork to reflect it. If you were reimbursed at the old 45 pence rate for any mileage between April and whenever your employer actually updates their systems, you are owed the difference, 10 pence for every one of those miles, and that gap has been sitting unclaimed for a lot of people since the change was confirmed. Let's put a genuine number on what this actually means, because the abstract pence per mile figure doesn't really land until you see it worked through properly. Someone driving 10,000 business miles across a full tax year, a genuinely common figure for reps, engineers, carers doing home visits, or tradespeople traveling between jobs, sees their maximum tax-free mileage allowance rise by a full £1,000 over the year purely from this single rate change. That's not a marginal adjustment, it's a meaningful pay increase for exactly the kind of worker who's been quietly absorbing rising running costs against a rate that hadn't moved in a decade and a half. Now let's talk about who this actually reaches, because the change on its own only really works if employers and self-employed workers alike understand the mechanics properly. If you're employed and your employer reimburses your business mileage, this applies directly to you. If you're self-employed and use HMRC's simplified expenses method, rather than tracking every individual vehicle cost separately, you can simply start claiming at the new 55 pence rate for your 2026/27 self-assessment, applied automatically to your qualifying business mileage for the full year. If you're a director running your own limited company and paying yourself mileage reimbursement, the same higher rate applies directly to you too. It's worth being precise about what counts as genuinely claimable business mileage here, because this is a common source of confusion regardless of the rate itself. Your regular commute from home to your normal workplace is treated as personal travel, not business mileage, and never qualifies under this scheme regardless of distance. What genuinely counts is travel between different work locations, visiting clients, traveling to a temporary workplace, or similar journeys that go beyond your standard commute. If you're unsure whether a specific pattern of journeys you make regularly actually qualifies, it's worth checking directly with HMRC's guidance or your employer's finance team rather than assuming every mile you drive for work purposes automatically counts. Here's the part genuinely worth acting on if you think you might be affected, because a meaningful number of employers simply haven't caught up with this change yet, purely due to the gap between the April backdating and the May announcement. HMRC has confirmed it's operating informally while the underlying legislation formally catches up, specifically to let employers pay that 10 pence per mile shortfall for already reimbursed mileage without triggering any tax or national insurance complications for the employee receiving it. Practically, that means if your employer paid you 45 pence a mile for journeys back in April or May, they can simply top up the difference now, cleanly and without any tax penalty on either side. If you're employed and think you might be owed this backdated top-up, the first step is straightforward. Ask your payroll or finance team directly whether mileage reimbursements have been updated to reflect the new rate, and specifically whether a catch-up payment for earlier months has been processed or is planned. A genuinely significant number of businesses are still running on outdated expense policies and haven't necessarily flagged this internally yet, particularly smaller employers without a dedicated finance team actively tracking every HMRC rate change as it happens. If you've asked and your employer either can't or won't top up the difference, there's still a route available to you directly through HMRC rather than depending entirely on your employer catching up. If you've been reimbursed below the approved rate, you can claim mileage allowance relief directly, either through self-assessment if you already complete a tax return, or through a form called a P87 if you don't. This lets you personally claim tax relief on the shortfall between what you were actually paid and the full approved rate, which matters specifically if your employer's internal processes are slow to catch up, or simply choose to keep reimbursing at a lower rate than the maximum approved figure. There's a detail worth flagging specifically for company car drivers, because it's easy to confuse this change with a completely different scheme that hasn't moved at all. Advisory fuel rates, the separate figures used specifically for company car drivers claiming back fuel costs on business journeys, are an entirely different system to AMAP, and were not affected by this announcement in any way. If you drive a company car rather than your own vehicle for work, this particular rate rise doesn't apply to you directly, and it's worth not conflating the two schemes when checking what you're actually entitled to claim. It's also worth understanding the national insurance side of this, because there's a genuine, if temporary, mismatch worth knowing about. The income tax exemption threshold has moved to 55 pence immediately, but the equivalent national insurance threshold hasn't yet caught up in the underlying legislation, meaning it currently still sits at the old 45 pence figure until the formal legislative changes work through Parliament. In practice, this means payments up to 55 pence a mile are tax-free right now, but the national insurance treatment of the additional 10 pence sits in a slightly more technical gray area until the legislation formally catches up, which is exactly the kind of detail worth flagging to your employer's payroll team if they're processing a backdated top-up, rather than something you necessarily need to resolve yourself. Employers reading this, or anyone responsible for processing mileage reimbursements at work, have a genuinely simple checklist worth working through now rather than later. Run a report of business mileage reimbursed since the 6th of April, calculate the 10 pence per mile shortfall against everything paid at the old rate, and process that top-up through the next payroll run where possible. It's also worth checking whether whatever expense software or app your business uses, several of the major platforms have already pushed this update automatically, but a genuine number still requires someone to manually update the rate within the system itself. It's worth understanding why this rate had stayed frozen for so long in the first place, because it explains a lot of the pent-up frustration behind how enthusiastically this change has been received. The Association of Taxation Technicians, alongside both the RAC and the AA, had been calling for a review of this specific rate for years, pointing out repeatedly that a genuinely realistic cost of motoring calculation would actually put the fare rate considerably higher than even this new 55 pence figure, closer to 60 pence by some estimates once fuel, insurance, depreciation, and servicing are all properly accounted for. The House of Commons Library's own briefing on mileage allowance payments backed up exactly this analysis, which is part of why this specific increase, while genuinely welcome, is still being described by some in the tax and motoring industry as a partial correction rather than a complete catch-up to the real cost of running a vehicle for work in the current climate. There's a separate but related change worth being aware of if you're specifically an electric vehicle driver, even though it doesn't affect this particular AMAP rate directly. A pay-per-mile charge for electric vehicles, sometimes referred to as EVED, was separately announced as part of last year's budget and remains planned for April 2028, set at 3 pence per mile for fully electric vehicles and 1.5 pence for plug-in hybrids. That's an entirely separate piece of legislation still working its way through Parliament, and it's worth not confusing it with the AMAP change we've covered today, since the two schemes address completely different aspects of vehicle taxation and reimbursement. So let's bring this together into something you can actually act on today. If you're employed and use your own vehicle for business mileage, ask your payroll team directly whether the new 55 pence rate has been applied and whether a backdated top-up for April and May is coming. If you're self-employed, simply start claiming the new rate on your current tax year mileage without needing to do anything else differently. If your employer won't or can't top up a shortfall, claim mileage allowance relief directly through self-assessment or a P87 form to recover the difference yourself. And if you drive a company car rather than your own vehicle, remember this specific change doesn't apply to you, since advisory fuel rates are a separate, unaffected scheme entirely. None of this is designed to suggest every employer is deliberately withholding money owed to staff. The overwhelming majority are working through this update in good faith, and the gap between the April backdating and the May announcement genuinely does explain most of the delay rather than anything more deliberate. But 15 years is a long time for a rate to sit frozen while genuine running costs climbed steadily throughout. And if you're one of the people this change was specifically designed to help, checking whether you're actually receiving it is worth 5 minutes of your time, rather than assuming it's automatically been sorted on your behalf. It's worth ending on a genuinely practical note about record keeping, because whether you're pursuing a top-up from your employer or claiming mileage allowance relief directly, the process is considerably smoother if you've actually kept a proper mileage log rather than trying to reconstruct one from memory months later. HMRC expects a genuine record of business journeys, dates, destinations, purpose, and mileage covered, not simply a rough annual estimate. If you haven't been keeping detailed records so far this tax year, starting properly from today and going back through whatever evidence you do have, bank statements, calendar entries, delivery or appointment logs for the months already past, puts you in a considerably stronger position when it comes to actually claiming what you're owed, whether that's through your employer or directly through HMRC. If this helped you understand exactly what you might be owed and how to actually claim it, hit subscribe, because I'll keep covering exactly this kind of practical financial update that genuinely affects UK drivers' pockets. A 10 pence per mile change sounds small in isolation, but multiplied across a full year of genuine business driving, it's exactly the kind of update that's easy to miss and genuinely worth chasing down. Stay safe out there, and I'll see you in the next one.